Welcome to week one OMD property talk down by the Drop-in Well in Milltown and the Rhino in the river.
Or the bull for the markets.
Or the bull for markets, yeah. So, I suppose let's talk about price really. What determines price? Is it as simple as supply and demand? Or what other factors? Or location, of course, is what most people tend to think. What do you think determines price?
I think currently at the moment, building costs are a huge effect on the executor type sales or the doer-uppers, renovation jobs. We've noticed in the last 6 months to 8 months that's become a huge factor.
Is that access to funds, do you think, from lenders, or is it people's cash supplies that they have? They've got limits to what they can spend?
I would think it's a bit of both, to be honest with you. Obviously building costs have gone up, so I don't think it's the builders they have to make their money and get their margins, but I think it is the banks as well are slightly nervous as well. Who knows? But I definitely think location, what we've noticed is there's still a lack of supply of good houses on the market. The apartment market is still very busy as well. Not a huge amount of investors dipping a toe in the market, which is a little worrying for the rental market. But
it's investors selling, isn't it?
Yes. And we do need the one-off landlords buying in with pension funds, etc., to help the market.
And the regulations aren't going to allow that, so
no, not at present. But regarding the market, it is very good. It's still very active. We have noticed since June, numbers of viewings and bidders have dropped off across the board. We're talking to other agents within the industry as well, so it isn't just ourselves and OMD.
Not necessarily a summer blip either, do you think?
I don't think so.
Interest rates, they determine price?
They will have an effect. Yeah, so once that comes in, it's going to be a lot clearer to see.
It's the cost of borrowing, it's the interest payments over 30 years, isn't it? That's what really impacts people.
People are actually talking about it now at viewings for sales. What will the cost be? What will the effect of the new interest rates be? Where we haven't had this conversation, where generally it was how much is a new kitchen going to be, or a landscape or rear garden. Now they're talking about a different factor, so it's just confidence within the market then as well.
And is that then, I mean, speaking of confidence, is probably the single biggest driver of any market, whether it be a stock or it's property. Again, we're talking about assets here. But it all comes down to confidence. Most people are what they typically call momentum investors. So we go with things that are good. We're pro-cyclical. So we'll tend to invest and put money down on assets like property when the market appears to be good. And then the opposite is true, and the panic sets in when things tend to look like they're going to wobble. So we actually create markets literally with our thoughts.
Yeah, but I think it's the safest bet still bricks and mortar, where you saw with Bitcoin or all the bit land
wild fluctuations.
So it's the great unknown, where if you come into money, you sell a business, you have excess money left over. What's the safe bet? Is it stocks and shares? Is it property? Like, there's still very good yields out there in the Dublin market. Yes, regulations have kind of come against landlords, especially in the last 8 weeks we've seen it, but it is still the safest bet. I would think that you have an asset, it may fluctuate up and down in price, you will always let it in Dublin if you find a decent location, which you can always resell it on. Where if you put money into Bitcoin, you have no idea what's going to happen, because if a big player in Bitcoin pulls out, there's problems there.
The only thing now I would say on the investment front with yields is that and there has been talk of this, that landlords may be forced at some stage to sell with sitting tenants. So that could be very low rents, and that will have a huge impact on price. And that would be very unfair for people who have bought in a market where these rules weren't present. And suddenly to get landed with that would be a game changer, I think.
It is the accidental landlords who are bought as a first-time buyer couple. They've had a child or two, and they're now renting a second home, and they're stuck with a property that is still a negative equity. So it's very unfair for those types of people who don't want to be landlords. They're not there screwing the market, if you want to put it that way. But we do need the one-off landlords. We don't need the vulture funds coming in, taking over.
For when it comes to what we're talking about today, we're determining price. Problem there with those type of investors is they'll own whole blocks, because they're in for the long haul, they can decide to leave units vacant in order to support the prices that they're asking. And this is something, that the renter in Ireland definitely doesn't want. We need more of the so-called mom and pop landlords, and we need to possibly change the tax regimen. I mean, I think it's patently unfair that an Irish person on a decent income pays marginal rate tax, so essentially half of the rental income goes to the state. If you live outside this jurisdiction, you're only going to pay 20% of your income. And if you're a vulture type fund, you're only going to pay pay tax on the dividends that you give to your investors.
Yeah.
Not on the income.
It's
very
a
unfair.
skewed market, but Darragh Breen and previous housing ministers have a lot to answer for, it has to be said. So obviously we can't solve this all today, but when it comes to prices and markets, it's confidence. Like we saw this in the start of the crash back in 2006, 7, 8. Everyone says it was 2008 the crash happened. We saw it in 2006 the summer. It just changed overnight in the office. And
June 15th, I remember, is the day I first noticed it.
And we were talking about it, but then the media grabbed a hold of it and said 2 years later that here we go, we're now in a crash, because obviously America happened, but we saw it in South Dublin straight away in June 2006. So, but that's what happened. The confidence was out of the market straight away. People got nervous. The banks were still lending. It was still easy to get money. But once confidence goes out, it doesn't matter where the locality is, if it's Aylesbury Road or if it's
going to get affected.
Exactly.
What I think we're noticing though now is a little bit more nuanced, though, in that certain property types tend to sell a little bit better than other properties at the moment. And again, certain price brackets. I mean, you can take a 2-bed apartment out in Lusk is typically doing very well now, whereas an executor sale of a house that needs a lot of work isn't in a very good neighbourhood, isn't doing so well. So,
and the work from home option obviously was something we've only been accustomed to in the last 2 years since COVID-19 has kicked in. So now you have your 3-bed with a garage. The garage is converted to an office, or you have a garden, which is a new thing. Obviously, we all figured out in lockdown if you didn't have a garden. It's amazing how important that became to all of us. So it is those small little things where you saw families living in studio apartments trying to work from home. It's not a runner. So yes, the properties that have the 4th bedroom or an annex at the backyard or Showmarks, I think they are the ones that are actually doing very well. So it's a good investment if you have it.
I think interesting times ahead. It might be a point to maybe stop our discussion this week and maybe take it up a little bit more next week, and perhaps we might show you around a couple of our properties.
100%.
Great, thank you.